From idea to enterprise. Business financials and profitability. Calculations, pricing and funding. In this video, we'll go through different calculations from profitability, sales volume and financial statement calculations to cash flow statement, and take a look at pricing and sales margin. We'll also introduce different business funding possibilities. Accurate calculations will help you estimate your company's profitability and the amount of money you need to start your business. They will also help you outline your pricing and sales targets. There are four main sorts of calculations you need to cover in your business plan. A profitability calculation helps you decide your minimum turnover target, giving you a good idea of the lower limits of your price range. A sales volume calculation shows you how much you need to sell to make your business profitable. A cash flow statement will help you ensure that you can always pay your bills. With the financing statement calculation, you will learn how much money you need to start and finance your business. This calculation should include all the investments and operating expenses, from costs related to tools, machinery, cars, rent and marketing, to initial inventory and possible salaries. Be realistic when making the financing calculation. The figures must be based on actual amounts and needs. Pricing is crucial to your company's profitability. Before determining the sales price of each product or service, you need to calculate how much it costs you to produce or supply it. Your company must retain some of the sales price as the sales margin. If you're selling at a high margin, you will need to sell fewer products or services to make your business profitable, while if your margin is low, you will need to sell more. When listing your prices, you need to take value-added tax into account. The value-added tax is an indirect tax which is to be paid by the end consumers. It should be included in the price if you are selling products or services directly to consumers. On the other hand, corporate customers will be interested in the price without value-added tax, as most companies can deduct it in taxation. To get your business up and running, you need to secure initial funding. If you have savings or other assets such as machinery, cars or property, you can use them to finance your new business. You can consider applying for loans from banks, pension insurance companies and other financial institutions, such as state-owned financing company Finerva. If your company does not have the collateral required by banks, Finerva's partial guarantee can be a suitable solution. Your company may also qualify for publicly funded business grants, which do not need to be paid back. Startups can also turn to business angels or venture capitalists for funding. Extended payment terms for supplies, leasing solutions, bank accounts with overdraft facilities, and credit cards can also be used to secure funding in the short term. To learn more about the requirements and best ways to start your business, please watch the whole From Idea to Enterprise video series.